All right, this is going to be the Monday, June 26th tech update. I'm going to do all four tech stocks in one video. Just want to speak about a lot of things tonight. I also will I posted the ETF video um, on for the public tonight, so I want all you guys to check that out. It'll give you guys a lot of insights into, you know, what I'm currently doing in the market, how I'm currently trading it, um, and it'll help you understand a lot of the reason why these Google setups and these Amazon setups failed. So I would say go watch the SPY and the QQ video first, and then come back for this one. Again, if you watch it on 2x speed, it's only going to be 6-7 minutes total. Then you could come back here. But if you don't want to watch it, that's fine too. Um, Basically, I'll just explain it quickly for those that saw it. So on Meme Stock Watch last night, um, posted these updates for QQQ and for SPY. Do not touch until we get down to the daily trigger. Wrote that in the update as well. Don't want to touch it unless price breaks above the hourly trigger, moves all the way down to the daily trigger. Same thing for QQQ. This whole thing was a do not touch zone. So when we look at SPY, just had this huge monster rally, and QQQ just had this huge monster rally. The way Gavin's counting it right now is that this move up was a wave 3, currently in a wave 4, which we hope that it bottoms here at the daily trigger for SPY and QQQ, wave 4 down to the daily trigger, and then one more push higher. A lot of the reason why the Amazon setups and the Google setups, which are great setups, they would have worked easily and made everyone a lot of money when the market was pushing higher. But because we're in this choppy wave 4 here, we're more than likely, this is what I said in the ETF video, SPY, QQs, they're coming down to their daily triggers. And so because of the just negative forces pushing the market down, this Google trade and this Amazon trade, that both would have been fantastic if the market was pushing higher, like it was in this wave 3, both of those unfortunately failed. And I lost on these trades, but I want to show you why I was able to lose so little just by going by the exact thing that I had here the entire time. So, Amazon opened up this morning right here and right off the bat shot straight to the upside. It got caught at our 131.46 level. You guys could see this literally to the penny. And from there, it was followed by downside the entire time. And I wasn't able to get that bullish hourly close above 130.47. Sold right back down here. Now, when I say as long as this holds among 135-ish, what I try to do is I try to buy an hourly close. Once an hourly candle closes above the level, that's when I buy, and obviously it couldn't get back above here. You guys could see both hourly candles right here failed. Oh, can't do that. Failed to get back above 128.46. Price sold back down. And once the hourly candle closed below here, I had to stop out of my contract as it's invalid on any hourly close below 27.68. So if you bought up here, you give yourself a lot more risk in the trade because it's only invalid on an hourly close below 127.68. Now, invalid doesn't mean price isn't going to go up. Still think price is going to go up, but the pullback, you guys will check Gavin's post. He has a pullback coming a little lower. But the trade that we set up, there was a lot of sold puts. And even though some of them are closed out today, the idea higher is still bullish. Daily trigger is about to cross above the monthly trigger. Hourly trigger is above the monthly trigger. This is in a very bullish trigger orientation. If I put the trigger orientation trend, we got the monthly short flat. It's about to be long flat, and weekly is long. Daily is long flat. Like Amazon is in a pretty bullish setup right here. But even if it's in a bullish setup and we're trading September contracts, we always structure our trades so that we enter on an hourly candle above a level and we exit the trade on an hourly candle below the level, an hourly candle close below the level. So if you bought September contracts here, after this hourly candle closed above here, you did go into profit here, so you could have played around with the stop loss, maybe stopped out on profit. But even if not, the entire loss is talking about 30 cents once the hourly candle closed below. So even when our trades don't work, the losses tend to be teeny. Also for Google, I think I actually drew it on this loadout, so just bear with me. Even on Google, we set up the trade. It had a great chance at exploding to the upside. It really did. It was able to form this macro airplane here. But then SPY just gapped down, and it was caught with the pressure from the downside market. So we had all the levels up here. This is where we had the original buy when we saw all those sold puts, that Thursday morning dip, and then there's a huge opportunity for move to the upside. I tweeted, feel free to take profit here. That was a really nice gain. And this is why whenever I take these kind of positions, I like to take shorter dated calls that I'll always sell pretty much like the same day, and I also take a longer dated call position. When I win on the shorter dated calls, I could sell them for profit, and then my further dated position is usually paid for. I also never plunge more than 30, 40, 50% of my portfolio into any single trade. But this was all laid out last night on Meme Stock Watch. Can buy dips here as long as 121.23 is not lost. If this level is lost, expect 119.88. And you guys can see as soon as this level is lost, this hourly candle, first hourly candle of the day, actually closed below here. Oh, actually, never mind. I am a New York time. Okay, so first hourly candle closed below. From there, sold down to 119.98, and from there, that was pretty much the invalidation level. So again, both of these trades were great setups, but understanding where the market is, the market was clearly in a way for a pullback. I didn't think it would sell down like this, but again, I'm just trying to explain when the market's pushing higher, like it was here, all these trades are going to hit 90% of the time. They were both good trades. The data was good. They missed, simply due to the effects of the market. Now, Google last night, I did say I was torn. Google actually showed some bearish data, and it looks like the airplane setup's about to be invalidated. Amazon was very bullish, got the very strong pop higher in the morning. But again, just got dragged down with general market. So up until last night or so, I thought that the dip was. I thought that there was a chance that without getting down to the daily trigger, price could start resolving to the upside and break back above the hourly trigger, setting up a move for a push higher. You guys understand everything in the ETF video, but at this point, it's becoming apparent that price is going to be headed down to the daily trigger. And if you look at Gavin's updates again, Gavin still has a push higher coming, and I can see the push higher. I really can. So push higher would look like this. Amazon a little lower. Looks like low 126s, and then the next move higher, Apple looks like down to 184, and then the next push higher, Google looks like down to 117ish, 116, mid 116s, and then again another monster move higher, and Tesla the same. A little more further down, Tesla were bearish yesterday, so glad we were able to hit that. Tesla again down here to the daily trigger, so then a push higher. Now, all of these tech stocks, it's essentially boils down to the same thing. If QQQ comes down here, bounces off the daily trigger, forms this airplane, the hourly trigger. Let me put this on a cleaner chart. Let's do this one. All right. Pretty good right here. Okay, so watch. There can be an incredible opportunity to go long Amazon and Google to look for prices up to 140, up to 150 even. These stocks can make us a lot of money in the upcoming months, but I just want to explain this very clearly. QQQ more than likely is coming down to the daily trigger. If the hourly trigger can keep coming down and form this airplane setup off of the daily trigger, so price would, keep dropping, etc., move down, kind of get like trapped in here, and then break to the upside. If this happens, then we have price going back, we have QQQ going back up to 370. And we think what's going to lead this charge is going to be Google and Amazon, Snow, possibly AMD, Tesla back to 280, Apple, over 200. Incredible upside moves in these five stocks, in these six stocks, that we can trade all higher to the upside. Also, Roku, possibly huge move higher. So as of now, while this downside move happens, I'm not really interested in trading these tech stocks because I'm just waiting for QQQ to come down to its daily trigger. If we get the bounce and the data starts turning bullish again, let's say LDPM, daily LDPM turns bullish. Let's say we see sold puts come into the market. Let's say we see this airplane form and price break above the hourly trigger. Let's say we see VOEX start to turn and turn back bullish. There's going to be so many clues that'll tell us that price is bottoming here and we're about to rip back up to the upside and put in a new high over here, that's when the time to long Google, Amazon, Snow, AMD, Tesla, Apple, that's when the time will come to long all these stocks. But for now, I'm expecting downside. And I don't know if this downside move is going to be super quick, straight down, or it's going to be slow grind until price finally taps this daily trigger. Now, again, there is the possibility that price cracks down below this daily trigger, moves all the way down to the weekly trigger. That would look like this. That would look like this, essentially. You have the hourly trigger keep coming down, cross right through the daily trigger. Now, if this happens, then, our thesis is invalid. And invalid means that, all these stocks are more than likely not going to make their big moves higher. Instead, we're going to have, extreme downside risk. Let's say something like this. Price finally cracks below and then, sells back down all the way to the weekly trigger right here. Hopefully, this doesn't happen. And, it's okay to be hopeful. It's okay to be optimistic. Now, remember, SPY is in a really bullish trigger trend. Monthly, then weekly, then daily, then hourly. That's the most bullish. So we are going to expect the daily trigger to provide support as of now. This is just, the backup option. This is not at all what we're expecting. But currently, the data looks bearish on the markets. And so currently, we are expecting this move down to the daily trigger. Once that happens, if we get all the bullish signals that tell us that daily trigger is going to catch, and we're going to form that airplane setup that we just showed before, and QQ ripping up to the new high. Then we're going to draw targets in Google, Amazon, Snow, AMD, Tesla, Apple, and hopefully try to ride all of those big, powerful moves up to the upside. Until then, I'm not really trading them. I don't see such great opportunity. Even if it moves slightly higher, I don't feel like I'm missing out because I don't think they're really going to be ready to make moves until we get down here. So it was unfortunate that the Google and Amazon trades didn't work. They did look really good. But again, if you just follow the plan, there wasn't too big of a loss to be had on any of these trades. So that's why we always give tight validation levels and tight invalidation levels. So for now, I'm expecting pullbacks in the market in general until we get to the daily trigger. And once we get there, let's see if the market decides to turn, setting up amazing upside opportunities for our tech stocks and our tech group.